Good morning and welcome to FBN Forward Markets. My name is Brian Como. Today is the 29th of August. First of all, my apologies for getting this out a little bit later than normal. This morning was a Statistics Canada production report that drops at 7:30 Central Time or 8:30 Eastern, and as a result, we kind of wanted to get those numbers and digest them a little bit and let the market digest them a little bit before we created this video this morning. So it is coming out a little bit later. Hope that's all right, but we will be getting you the most accurate information possible. So getting into what's going on in the markets today, we actually have most of the grains in the red today. We've got corn down at 495.50. That's down just a little bit, less than a cent. Soft red winter wheat is down 9, almost 10 cents at 607.25. Hard red winter wheat is down 13.5 cents to 736.25. Minneapolis wheat is down 2.25. It was up earlier, actually, after the Stats Canada release, but we'll get into that in a second. 7.89 and a quarter is what spring wheat is trading at. We've got soybeans down 5 and a quarter today, trading right around $14 a bushel on the futures. Canola is up about $5.30 at 814.40. Soybean oil has shifted and has moved to the positive this morning at 63.51. Soy meal is down today a little over 1% at 413.90 a short ton. We got crude oil up slightly. We got the US dollar up slightly, and the Canadian dollar has faded a little bit down to 73.41. And the indices are a little bit mixed. We've got a little bit lower of an S&P and a NASDAQ and a little bit higher on the industrials and the Dow. So that's what's happening in the markets today. So first out of the gate here is the Stats Canada report. So what we did see was mostly bullish information out of Stats Canada, including 1 million tons less than expected on spring wheat. We've got about even on durum, but oats, barley, some of the smaller crops, lentils, peas, those all kind of disappointed, I suppose you could say, or were closer to the downside of estimates. The one that is creating some questions in our mind is around canola. So canola came in at about just about even. We're right close to trade estimates, just a little bit above, actually, about 160,000 tons above at 17.5. So I think what the market is looking at right now is that I think the whisper number may have been a little bit lower than that, higher than that, and the market is trading an upward bias today, which is interesting because Statistics Canada also did something interesting on the canola, which was they added some pretty heavy tonnage to past years, including the 2021 drought year. So in 2021, they increased production by 496,000 tons. And in 2022, they increased production by 521,000 tons. So both those combined actually equal more than 1 million tons that was put on the balance sheet this morning that wasn't there yesterday. So I kind of waited to see what the open would bring on canola because I wanted to see if the market would realize these numbers and trade them with a negative bias. It's possible that analysts aren't looking at past production numbers yet, and that hasn't been priced in, and we may see some weakness throughout the session. However, if we continue to see positive trade into the end of the day and into the close, I think what that might mean is that this 1 million tons was priced in. I don't think it was a surprise to anybody that Stats Canada was understating previous years. And as a result, if we do finish canola in the positive today, I think that might be a bit of a bullish input into further markets. So just looking at the chart here, we're up near 815-ish or so this morning. Testing previous highs. We've kind of rallied through the middle of August. There's a previous high around the 850, 860 mark that might be a target if this is going to be a bullish commodity going forward here. So yeah, it's an interesting day for canola and for Canada after the Statistics Canada report today. Moving on to the U.S., soybeans did fall after data showed the U.S. crop was less damaged than feared. Chicago soybean and corn prices dropped on Tuesday after U.S. government data showed that a decline in crop conditions due to hot and dry weather was not as severe as many analysts had expected. So The crop progress report on Monday rated 58% of the soybean crop good to excellent, which is down only a percentage point from 59% last week. There were some big revisions in some of the big states like Iowa, but overall, I think the market was relatively unimpressed with the reduction in crop ratings. I think the market was largely expecting about a 3 percentage point decline. I think this is will be a bearish input for the day, and I do think that the USDA underestimated the damage done, and that the market will still be pricing in damage to the soybean crop due to the heat and lack of moisture over the last 3 weeks, and we see some of that continuing into the next couple of weeks. As we know, the USDA crop condition ratings also have little correlation to final yields, and we still are in pod filling stage. Here's the soybean chart for today, so you can see it kind of backed off from its gap higher yesterday. It's trading right around the $14 mark. When I took a snapshot of this chart, $13.93. Overall, I still think this is a bullish chart. I think there is possibility to trade up into that 1420 plus area. However, obviously the risk of the downside now is a little bit more acute. We've got probably a more weighted downside risk down to the 200-day moving average, brings us to 1331. So there's probably more risk of, if you just look at it from the odds standpoint, even in a sideways kind of trading pattern, there's a little bit more risk now to the downside than there is opportunity to the upside. All right, I just wanted to show some other charts that I thought were interesting. Corn is up a little bit today around the $5 mark. I think this is important if you're looking at corn and making a sale at corn in that $5 area. I think this might be an opportunity to do that. I think our bias is generally more bearish on corn. I think the market's bias is more bearish on corn. As we alluded to yesterday, traders are continuing to build a short position in corn. Generally, managed money doesn't build positions in a market that isn't going to go in that direction the long term. So I think this might be a good opportunity if you have some targets in that $5 area. Some interesting trade in wheat today. We saw Chicago and Kansas. I'll move to the Kansas chart here in a second, if it will allow me to. Trade back down to those previous lows. So we are touching some support today, 793 or 7 around 740 on the Kansas and around 610 or so on the Chicago. We may find some support there. If we start to break down below these levels, these are traditionally some seasonal low times for wheat. That doesn't mean that we've reached those lows at this point. It could still punch lower before rallying back. If we see a break of those support levels, that might be a concern for some short-term weakness, even inside of a seasonal low pattern. Minneapolis was catching a bid earlier this morning on the Stats Canada numbers. The market did expect more spring wheat production than what Stats Canada reported by about 1 million tons. That initially had Minneapolis up, although as we talked about after the open there, we did see about a million, we saw a few cents in losses. So we were trading in the red now in Minneapolis. So this chart's a little bit out of date, but overall, it's also testing support. Perhaps Minneapolis may be the one that can stay above that support if the others are going to break. Maybe there is a bit of an opportunity to spread Minneapolis against some of the winter wheat crops based on the Canadian production outlook. And maybe some of that will get transposed onto the U.S. side as well, as far as the North Dakota production assessment and things like that. So there may be some opportunity there for spring wheat, at least relative to the winter wheat classes. Another commodity that is doing really well today is oats. We saw a pretty positive report from Stats Canada on oats. Of course, Canada is the largest producer of oats. And, oats continues to reach over $5 a bushel on U.S. exchanges. So this continues to be kind of a bright shining star in a lot of the in the commodity markets in North America at this time. All right, that is all we had for you today. Thank you for joining us, and we'll see you again tomorrow.